Hello, it's Thursday the 17th, I'm FX Plu, and this is the market brief. So, UK inflation rose to 2.1% in May. The market expected 1.8%, but breaking the Bank of England's 2% target shows that, just like the US, prices are rising faster than expected. The Bank of England already expected inflation to reach 2.5% this year, but given the pace of the recovery, we may see that forecast revised higher. This is the first time inflation has been over target in more than 2 years, and it just serves as a friendly reminder to those calling for the government support to be extended that really the economy needs to start supporting itself by now. And despite pressure to extend furlough, that scheme is going to be withdrawn at the end of September, despite the risk that it may reverse some of the gains in some sectors of the economy. We'll see. But just like the US, where the Fed faced more pressure to act, this suggests that the next MPC meeting may have a more hawkish tone to it. Sorry, a fly's just gone in my eye. That said, the MPC, just like the Fed, will no doubt try and extract maximum benefit from the QE programme before economic reality returns. They meet next week, and just like the Fed, there's a little expectation of any change. But maybe a little more advanced guidance of the intentions would be welcomed by the market. In the market, however, the pound positive expectation from that inflation data didn't turn out to be true. We dropped below 140 against the dollar, dropped to 139.80. But that move was driven by the dollar reaction to the Fed meeting. So, to the Fed. The dollar reacted positively to Powell's press conference. He said that discussion about tapering support for the economy had begun. Discussions centred around the speed of the recovery, which has clearly exceeded expectations, but they see no reason for the recovery to slow. However, that doesn't mean any imminent change, and the time for tapering is still some way off. So, the rhetoric basically has stayed on script. Acknowledging that they are discussing tapering makes little material difference to the plan, where the FOMC wants to ensure that every stage of the recovery is met and succeeding before they move to the next phase. Ultimately, they confirmed a conversation but committed to nothing new. However, accompanying Powell's comments was the latest economic forecast. This confirmed that the Fed expects 2 rate hikes by the end of 2023 as the anticipated pace of tightening increases, and that seemed to satisfy the market that the right level of guidance has been provided, and the dollar rallied. The dollar index rose to 91.40, that's the highest we've seen since the recovery began. And meanwhile, euro dollar broke 120. We fell to a low of 119.85. The question is whether that is the new level for the dollar, or whether the MPC meeting next week will reverse these gains with their accompanying comments. Tune in next week to find out. Right, lovely, that's it from me. Have a great day. Join me again tomorrow.
If you do not have a clue, then just tweet through and ask FX Blue.